Japanese markets have regained its calm after turmoil Friday last week on back of Britain's vote to quit the European Union. The Nikkei stock average tumbled almost 8% and the yen briefly soared above 100 against the dollar. The Nikkei stock average is now rallying at 15,000 yen level and the Japanese currency testing the psychological 100 yen against the US dollar. Investors are cautiously trying to assess what might follow, but many voice concerns that it may have left prolonged damages to Japan's economy. Britain's vote to leave the EU has certainly shook the foundation of Japan's economic recovery. The higher yen and further slowdown in global economy will dampen exports, corporate and consumer sentiment here, adding further downward pressure on the economy.
Further gains in the yen will certainly hurt the Japanese economy. Performances in the export-related manufacturing sectors are also expected to worsen, and that will affect corporate profits as well as wages. At worst, it could also drive Japan back into deflation. The yen's further strength will be a negative impact on Japan's corporate profits and the economy as a whole.
It is also expected to dampen corporate investment, as the uncertainty in the global economy is expected to continue for some time.
With Britain's vote to leave the EU, it will make it harder for the companies to make decisive investment decisions. The corporations have held off investments for some time, and this will certainly be a setback to future investments. The manufacturing sectors will remain stagnant or weaken even further.
There are expectations of government supplementary budget after the upper house election, which ends on 10th of July, while BOJ continues its effort in maintaining the liquidity in the market. All still unclear of what further development one might expect, but it is certain that Japan wants to maintain the psychological 100 yen to the dollar.
If the yen surges rapidly to over 100 yen against the dollar, it's likely that the government and the Bank of Japan will intervene in the market to prevent excessive rises.
The market now is out watching what further moves the BOJ might make during its policy meeting scheduled at the end of the month. Terrence, CCTV, Tokyo.